Hi, everyone. Thanks for joining. We're just going to let a couple of people drip into the room, and then we'll start at about 3:05. Thank you.
All right.
All right. Thanks, everyone, for joining. My name is Lamide Adeoshin. I'm a principal at Consonance Investments. I'm joined by Dolapo from Traction Apps. Today, we're here to talk about navigating retail payments in opportunities across Africa, right? So one of the things at Consonance that we do is we invest in financial market infrastructure. Dolapo and his team at Traction Apps are building that for the offline mass market retail space in West Africa. We're very excited about what they're doing. We've invested in over 30 companies since 2018. And we focus on tech and tech-enabled investments. With that, I'll hand it off to Dolapo.
Thank you very much for the introduction. Hi, everyone. It's a significant pleasure to be here and have everyone join us. My name is Dolapo Adejugbe, one of the co-founders of Traction. It's a great honor to do this with Consonance. Consonance was our first institutional investor, and when we came to them, we're like, there is an opportunity in this space, and it's green, and everyone is ignoring it. And they've been holding our hand through the journey to basically help us move, right? And over the last year, it's been grow. And also, we thought there was a significant opportunity to also bring partners and co-players in the space across the continent to discuss, what we think the opportunities are and how to navigate that essentially. So, Lamide, over to you. Take it away.
Thank you. Yeah. So to start it off, we actually have an added bonus feature. So we're hitting you guys off the top with special juice. So we have Adam Shichet from McKinsey & Company here to really just paint the picture of what the landscape is like in across Africa, right? For retail payments. So Adam, please, I'll hand it off to you.
Thank you very much, Lamide, and nice to meet you, everyone. So my name is Adam Ademfesin. I'm a partner in the Lagos office. Focus the bulk of my work actually on just payments and fintech. And this, as you can tell, this is a really exciting times. I just have a lot of fun working with these types of clients, and seeing the successes they achieve, and every day there's a new unicorn popping up, right? So it's a great time to be a fintech in Africa. What I'm going to share with you is just a very few slides, and then I'll leave a few minutes for a bit of Q&A before I hop off, right? So I'll sort of breeze through the slides just to paint a picture, and then leave a little bit of time for a conversation, right? So I think to start off, right, I know we're talking about retail payments, but I wanted to make sure that we have a good understanding of the landscape in Africa, because we rarely think of Africa as home to sort of companies that are generating revenues in excess of $1 billion, right? But as you can see from here, there's quite a number of that population on the continent and growing, right? This view I'm showing you is at least 4 years old, right? And since then, we've seen at least 2 others add to this. But also, if you look at the growth trajectories of all the fintechs, you'll see that a lot of the new players that are going to be in this category are not going to be your traditional manufacturers, etc. But this is trends that are already older in other parts of the world. So if you compare that number to the SME landscape, though, it's a bit of a joke, right? There is about 80 million SMEs on the continent, and about half of those are actually in Nigeria, right? There's about 80 million businesses on the continent, and they're actually small businesses on the continent, and those businesses combined account for more than 80% of all income and employment, right? So this is not just like, and then we like to refer to this as the informal sector, etc. But this is the economy, right, of Africa. Now, just to clarify what's included in these numbers, right? Because I know there is always a lot of noise from things like, does this include subsistence farmers? No, this does not include that, right? This is a business, these are real businesses that employ at least one person other than yourself, right? Now, to put this in perspective in terms of the opportunity that exists in retail payments in Africa, right? Even the most successful fintechs are boasting merchants of less than 300K, right? And I'm gonna try not to mention names because some of these people are my clients, but even some of the oldest sort of, pioneers on the continent, even in East Africa, barely have 300K merchants, right? So that tells you the size of the opportunity there is to mine going forward. And this is one of the reasons why when someone asks me, so who is the winner in payments in Africa, it's like, it's too early to be talking about winners and losers, because there's going to be a lot of winners for a long time, just given the sheer size of the opportunity there is to mine. There is enough for everyone to play for a while before we start talking about winners and losers. Now to talk about markets, right? So, the thing is, Africa, it's in some cases, it's a very misleading notion to think about Africa as one homogeneous blob of a continent, because it's not, right? However, there's a few markets that drive the bulk of economic activity, and you can think of Africa as it actually operates more like hubs and spokes, right? So Nigeria is one hub surrounded by a number of spokes. Kenya is another hub surrounded by a number of spoke countries. South Africa is another hub surrounded by a bunch of spoke countries. And then North Africa is more of a tightly integrated cluster, right? And then you think of Francophone West Africa, all right, including Francophone East Africa, which operates more like a common market because the regulation is the same, the currency is the same, etc. It's more helpful to think of that as one market than different markets. But the key takeaway here is that there's a few countries that account for the bulk of activity, right? And the bulk of payment revenue, as well as you see moving forward. Now, if you were to then make the mistake of thinking of Africa as one big block, the one thing that is different about the revenue composition for retail payments in Africa is that it's largely driven by mobile money, right? But that picture we'll get into a bit of how that changes once you move from country, because this doesn't speak to all countries, but actually makes a point about why we shouldn't think about Africa as one homogeneous piece, right? Now, a lot of transactions in Africa are still driven by cash. Depending on what part of Africa you're in, this is something in between 80 to 90%, sometimes more, right? So this dynamic of high cash intensity combined with a large number of small businesses that are hardly penetrated, those two things combined is what makes people believe that there is just such a long horizon for growth for Africa in payments, because there's a lot of merchants who acquire a lot of consumers to bring to electronic payments. And there is enough depth in the market that you can continue to do that for a really long time, right? So I think the way most investors are betting is that it doesn't really matter who you bet on, just bet on everyone, because there's enough growth for the market, just bet on the market, right? Now, when you come to, and this is then coming from this view of the world where you're saying Africa is largely driven by mobile money, you come to this world and you say, well, actually, it depends what market you're in, right? So if you're in Nigeria, it's a largely EFT-driven market, and a lot of the wallets, etc., still integrate a lot. Is probably what you most resonate with, right? If you're in my country, Ghana, MTN has essentially taken over transformed the payments landscape. Is largely driven by mobile money, as you will see in Kenya as well. South Africa is largely driven by cards, and cards are continuing to grow faster than wallets, right? So it really depends what part of the continent you're in. And this is why it's important to be an omni-channel or omni-instrument payment acceptance services provider. You can't pick one of this, because if you're going to be continental, you're going to need all of these capabilities to be relevant in different parts of the continent. So you can make yourself a card specialist or mobile money specialist, etc., because you still find yourself irrelevant in some key markets. That will make it challenging for you to be relevant to merchants and consumers. I won't say too much about this. This is just highlighting the point that the payment instruments are different and the players are different depending on market share. Now, talking about revenues, the money, right? As of 2020, total focus on the domestic part, right? The total revenue, right? This is not transaction volumes, this is not transaction values, this is revenue, right? From payments, domestic electronic payments in Africa. So this doesn't include cash, right? Electronic payments in Africa. And this also then excludes sort of your heavily driven bank transfers and the corporate transfers and sort of corresponding banking in those types, right? So think about what is the type of revenues you would be thinking about for the M-Pesas and Flutterwaves, right? This is that type of revenue. It's about 11 billion, right? And then the rest is from cross-border. So this is when you say domestic, this is happening in countries, right? Isolated countries, right? And then the rest is cross-border, right? Now, what's important to note here is that offline payments is more than 80% of that revenue. Online payments is smaller, but it is faster growing than offline payments, right? But let me not say all of that here. So what's the thing to know about Africa is a strong growth, right? And we had a sort of a jump in 2020, between 2019 and 20, accelerated by COVID. But we expect strong growth to continue going forward, right? Now, the one thing to notice here is that the revenues are growing at a slightly lower rate than the transaction volumes and values. And the reason why that is because take rates are on a long-term decline, right? Between 2015 and 20 alone, you can see a steep decline in the take rate, which is a white number in the blue bubble there. And that's just a global trend that will continue to persist. We talked about this briefly, right? The bulk of the revenue is driven by offline, but the bulk of the growth is coming from online, right? So as you can see, the CAGR for online in the last 5 years has been like 54% versus 30% for offline. Going forward, online will continue to grow at slightly the same pace, while offline will decline slightly. But the important thing is this to know here is that if you're a player, you really don't have access to online as much as of online if you don't have a play in offline, right? And the players that have started purely online, right, are starting to go offline, because when you're purely online, you're targeting a slightly different merchant base, which is what you would have seen on the first slide. This, you're largely targeting global merchants. You're largely targeting businesses that are already online, but those businesses would already have come online with a partner that brought them from offline to online, right? So that kind of restricts you to certain types and size of and sophistication of merchants, and also certain verticals of merchants. So you're mostly looking at the hotels and airlines, etc. Those types, right? The truth is that the bulk of our merchants are offline, and they are open to online offerings, but someone needs to go and find the business offline, and then you can take them online, right? Now, the reason why online revenues also grow faster is because the revenue intensity for online payments is much higher, because card intensity is higher online, right? I'll just go through 4 lenses of looking at these revenues briefly, and then I'll close it out there and open up for you, right? So one is, how is the revenue distributed across the value chain? How is it distributed across geographies? How do payment channels account for this? And then the payment methods. We've already talked about geographies and payment channels, so I'll just focus on the value chain and then the payment instruments or payment methods, right? Now, the basic way to understand it is the closer you are to the customer, the more revenues you're likely to capture. So you're seeing players evolve in places where they're not even focusing on building a gateway or any of the infrastructure components. They're just going directly to acquiring merchants or consumers, including cheaper cash. And they'll rent your infrastructure or whoever else's infrastructure to offer this, and focus more on acquiring the merchants, because that's actually the tough part, right? It's very expensive and very difficult to acquire merchants and to offer them reliable services. It takes a lot of money, right? These days, it's taken a few lines of code and investment in ever-reducing cost of physical infrastructure to get a gateway up and running, right? But the real difficulty is actually going there and acquiring the merchants. So if you look on the acquirer side, which is close to the merchants, that's more than 50% of the revenues in the value chain. If you look on the right side, closer to the consumer, that's about 30% of the revenues in the value chain. And then the core processing is just something between 5 and 10%. Right. So that's how I think about the revenues in the value chain. In terms of geography, South Africa is currently the largest, but Nigeria is the fastest growing, and we estimate that by 2025, Nigeria would have overtaken South Africa as the largest revenue generator, right, for payments in Africa. We've talked about this already, and then we've talked about this already, right? So we talk about the payment methods and how they differ by country, right? I think I'll pause there and see if there are any questions. We'll share. I'm happy to share some of this with Dolapo and Lamide to share with you. But I think in terms of the trends or the key factors that we see driving revenue growth and the acceleration of valuations of the continent, I just picked 2. One is the first 2 actually, or maybe the first 3, the digital disruption, right? As you can tell, there's like sort of your stalwarts, like the what you call interswitches, etc. And then you see newer players like the Paystack and Flutterwaves that are much more focused on the user experience and the digital components of this, and they'll integrate all of the infrastructure into a seamless user experience. So that's important, right? The other one is the product expansions. And Africa is sort of at the beginning of this journey. Even some of the most advanced players are still at the beginning of this journey. A simple way to think about it is, if you look at Square's revenues, it's come from about 90% payments transactions processing, and now payment transaction processing is like 25% of the revenues. The rest comes from value-added services and lending, right? But in Africa, the bulk of the revenue, 80–70%, is still driven by payment transaction processing and grow to an increasing extent by FX. But if you're in Nigeria, that's a different kettle of fish. Then you have the vertical integration, which is essentially a lot of players that have started off as pure infrastructure players are expanding either to the left or right, because that's where the money is. So they're going into either merchant acquisition or offering some consumer play or wallets, because you need to access the customers to make the money. So I'll pause there and open up for questions.
All right, thank you very much, Adam. That was fantastic. We actually have a couple of questions. We'll take one now, and then we'll answer the other later. So one of the questions is, how would you compare, or what are the dominant offline acquiring solutions that you're seeing, and what are the offerings that they're using to get those customers?
Yeah, so like I said, right, the key thing is that you have to be omni-channel. So it depends what country you're in. I think if you're offline, generally we think of it as POS, but the important thing to note is that even POS the nature of POS is changing rapidly, right? There's now, I'm sure you guys are familiar with all of this, is the soft POS is probably the way a lot of the players are going now, right? I think the important thing to note is that if you're going to offer an offline acquiring solution, you need to find a way for folks to accept payments physically, but the form factor can be different. The important thing is that you should be able to accept all payment methods, especially the ones that dominate the country you're in, right? So you can either be, the form factor is really irrelevant. You can either be Square offering the thing, or you can have a soft POS, which is just a smartphone, or you can be PagSeguro with like a wide array of POSs. I think OPay now offers something that's literally like a calculator, right? So the form factor is less relevant as long as it works and allows omni-channel or omni-payment method acceptance.
All right, fantastic. Thank you for that presentation, and thank you for your time. We'll share some of these. We'll circulate the slides. Thank you for allowing us to do that, and we appreciate that very much.
Cheers, guys.
All right.
Thank you.
Thank you, guys. Unfortunately, I do need to hop because I barely squeezed this in. So bye-bye and chat later.
Awesome. So we're joined by a panel of awesome entrepreneurs, operators, and investors. First, we have I'll introduce Dhruv. Dhruv is the CEO of BharatPe. BharatPe is this awesome QR code based payments infrastructure in India. They accept everything. It's fantastic. So he'll tell you more about that. We also have Marcelo, head of international expansion for Yoko. So Marcelo, please join us. Awesome. We have also Han, head of consumer payments at EcoBank. And finally, last but definitely not least, we have our second Dolapo Agbaje from APIS. Thank you for joining. Fantastic. So today we're gonna really cover three topics. We're gonna cover first, like, how big is the retail payment opportunity in Africa, right? Secondly, we'll talk about what are the successful business models needed to scale digital retail payments, and we'll get obviously some examples from Dhruv and what they've done in India, and Osahan can talk about models across Africa. Marcelo can talk about across Africa as well as Dolapo. So great speakers here, and then we'll talk about who's really best suited to win in this space. So that kind of question that we were left hanging. Adam kind of mentioned it. He didn't want to get into it, but we're gonna dig into it, and we're gonna see what everyone thinks, right? So first, we'll start off with defining the space and defining the size. So maybe Dolapo, if you can dig in there, talk about the retail payment space and what problems you think are along the value chain that SMEs are really facing in processing payments and managing their businesses.
Okay, thanks Lamide, and thanks to the broader Consonance and Traction teams for having me on the panel. Really excited to be here today. I think a lot of the discussion has been around payments, but when we think about SME pain points, we really now should be focused on the broader suite of SME challenges, right? Which I think, from a value chain perspective and also from a provider perspective, one has to be thinking about. Payments are effectively table stakes now. So I would categorize the challenges along the value chain into three. The first being accepting payments. Second being managing your business as an SME. And the third, which doesn't sound like a pain point, would be growing your business. I think to take the first, which is accepting payments, Adam mentioned in his intro how there is effectively a proliferation of different types of payments across Africa. So in each country, the mix varies by country. You have some that are mobile money focused, you have some that are instant EFT focused, you have some that are card focused. What's important is that there are a large number of these payment types. The market is growing very quickly, and for a merchant or a retailer, it's often quite complex to ensure one has a handle on all of these. And I mean, to give some anecdotes or to help put some color to the stats that Adam shared. I mean, if you take a market like Nigeria, which has produced some of the kind of most talked about payments companies out there, as late as 2018, less than 10% of the market used cards for payments, right? And less than a third of registered BVN users made account-to-account payments. So these markets are still very much in their infancy, but growing very, very quickly. You could compare and contrast that to a market like South Africa, where the average person carries 2 cards. And then in East Africa, obviously the proliferation of mobile money is well documented, but you also have it rapidly growing in other markets, for example, in Ghana, as Adam mentioned, and more recently in Senegal with the likes of Wave, raising $200 million and being valued at $1.7 billion. I think even though historically most of our markets have been cash-based, I think the common thread that you can carry across all markets with all these different payment types is that we are rapidly going from cash to digital, and that has been accelerated by COVID. An interesting stat is, again, in Nigeria, we had our first recession in 20 years in 2016, but real payments, so number of transactions, were growing at over 50% year on year. So it's an increasingly complex and fast-growing market for merchants. I think if the second part of your question is how maybe we address some of these things, or I guess I effectively dealt with the first part, which is the complexity. Now we can talk about managing your business. So after digitizing, businesses are becoming more and more formal, and it's about how do I track my monthly ingoings and outgoings? Are my products flying off the shelves? Are they not? Payrolls, taxes, these are all things that business owners, merchants, and retailers have to worry about. And a significant number of man hours are burnt doing reconciliations, for example, every month. This time could be better spent thinking about how to acquire new customers and develop new products. The third challenge I mentioned was around growing your business. The IFC has a stat out that there is a funding gap of $338 billion in Africa for SMEs. And this is credit is a critical element of growing one's business. I mean, one can also look at other things such as customer acquisition, customer retention. These are all top of mind. How do SMEs grow their business? So those are the kind of main pain points that I see in the SME solutions, space. And I can give just very briefly a few examples of how some of our portfolio companies have been dealing with this. We invested in a business called DPO, one of the largest online payments acceptance players across Africa, operating in 19 countries and accepting payment types across all of those 19 countries with a single integration. So if you're Uber or you're Jumia and you want to navigate this complex system with a single integration to DPO, you can accept payments. In South Africa, for example, if we talk about how people manage their business, we've got a business down there called Adumo, and they provide an omni-channel solution where retailers can look at both online and offline channels for payments acceptance. Another example, this time for growing your business, we have a business called Ikoka, and they provide merchants with merchant cash advance, which effectively allows you to take a loan and pay for that loan from your retail proceeds over time. These are just a few examples of SME solution providers solving SME pain points across the continent.
Awesome. That was fantastic. So I know, Drew, I know you can jump in there as well. I know there are a lot of things to jump in, but first we're gonna go to, sorry. First we're gonna go to Osohan, sorry. And we're gonna ask him, can you dive deeper, into these issues that merchants are facing across Africa, and then how did the impact of COVID-19 change how payments are accepted? Thank you.
Yeah, so thanks a lot, Lamide, and also Dolapo, and also the companies behind putting this panel together. I really am glad to be here. It's really an interesting conversation so far. So you were asking about the issues that merchants are facing. I mean, as Adam mentioned, there are about 95 million MSMEs in Africa. And these are companies that account for a majority of the employment in the countries in which they are operating. And these merchants are dealing with a myriad of issues, from access to credit and liquidity, infrastructure deficits, challenging government regulations to comply with, and a lot more. The ease of doing business rankings in Africa are some of the lowest in the world. However, there have been some pockets of improvement in recent years. But when it comes to payments, some of the key realities that merchants face are, number one, cash is king. Over 90%, I think Adam showed 93% in 2019 of consumer payments are in cash. Cash handling has hidden costs, which the businesses often need to bear themselves. The second one I would say is that infrastructure is weak. We have very poor data connectivity in many areas, and this causes payment friction, among other issues, for the businesses who are seeking to accept digital payments. And then the third thing I would say is that access to credit and liquidity is very limited. And I think Adam spoke a little bit about that too. The fact is that, as MSMEs are expensive to serve for large banks and large processors, who are in the payment space as well. And there's very limited risk rating data and other structural challenges that prevent these businesses from receiving credit. So there is a very big gap. Nobody has really cracked it yet in terms of how do you make sure that MSMEs get the funding they need and they pay you back, because you can't really do business if you don't get your money back. Now, the second part of your question was talking about how COVID-19 has affected African merchants. And the changes have been over a period of time. But I think the first thing that was experienced was a loss of business, right? Because discretionary spending went down. Some sectors like travel, leisure, and entertainment were particularly badly hit. I know that on the East African side, they were having a lot of challenges with the, tourism was a big money spinner for those countries. And so when you have a business that is based on tourists coming in and people can't fly, then you can imagine what that does to the business. And according to the World Bank, the economy, as measured by GDP in sub-Saharan Africa, actually shrank about 2% in 2020. Millions of people were pushed into poverty, and these are customers, right? So the businesses suffered a little bit of loss, and many of them, at the time, there was very little by way of palliatives being offered to support these businesses through this economic downturn. So it was challenging. Second thing that I would say that they faced was they saw a shift in some payment methods, because there was an increased use of electronic and contactless solutions. What we saw at the beginning of the lockdown was that access to bank branches for cash withdrawal was actually limited. People couldn't even get to bank branches. There was a period where you couldn't even move. Then there was a period where there were skeletal services available. And so it meant that people had to start finding ways to receive their payments electronically. So, we saw all sorts of changes which have continued. As I think some of the data was being shared earlier. In Nigeria, POS transactions processed in the first half of this year were about 3 trillion naira, which is up 50% versus the same period last year. So even when the lockdown period has passed by, people are gravitating towards these electronic payment forms a lot more. Then what we also saw was that businesses started to adopt e-commerce, right, to reach the customers, because they needed to reach customers in some way or the other, and maybe they had not done so in the past. And so we started seeing a bunch of marketplace platforms popping up and other e-commerce solutions. So we had a bunch of payment firms who started, marketplaces, and there has been good adoption of those because people need to reach their customers somehow. Just to put light on this so that you can understand what, or maybe I should use an illustration. During lockdown last year, I called one of the top restaurants in Lagos to see if they could deliver some food to us. They referred me to a startup delivery company, and I called them, but did not get through. Then I called another one of the leading restaurants in Lagos, and they promptly sent me their specially designed lockdown menu. They sent it via WhatsApp. I responded with my order, and then they sent me an invoice along with the account details for a transfer. My food was delivered without a hitch. Guess which restaurant I tend to order from the most now? So it's really the businesses that were prepared and quickly able to adapt that have weathered the pandemic storm a little bit better than the others who were not very well prepared or couldn't move quickly. Fantastic. So that's what I would say regarding this. Thanks.
Fantastic. Thanks so much, Ozan. So now, Drew, let's get back to handling all these payment options. I think we can talk about it from another emerging markets. I mean, although I guess I don't know, you guys are, one time I was in business school and I was telling this girl, I saw her the size of Lagos, and she was like, it's smaller than Delhi. I was like, wow. I was like, it was like, I was dang, for the Giants, okay. But anyway, Drew, let's get to you and let's hear, how have you guys handled, first acquiring and accepting all these payment options, and then also providing and helping businesses and SMEs manage their business, right? From an emerging market context, and then also Dolapo traction from a West Africa context.
So firstly, thank you for having me. I keep telling Dolapo Attraction that when we talk that both Nigeria and generally Africa is a very special place in my heart, because my mother runs a business out of Lagos and Johannesburg. So I've had the good fortune of visiting multiple times. And every time I come, it looks like you guys just, took everything down and built a brand new city all over again. And the growth is spectacular. So when people come to India and they say, oh, India is growing, I'm like, why don't you go to Africa and see what growth really means? I think, Adam said it really well. Osan has also sort of, and Dolapo came in on it. I might say a few things that are contrarian, but I'll just try and quickly summarize what our position is and what we are seeing. I fundamentally believe, as Dolapo said, payments are table stakes, okay? Financial services is a pull product. It's not a push product, right? So there's a lot that you sit and build, and it brings in usage, it brings in traction, it brings in trust. And we'll talk a little bit more about it later, right? But I think, payments is a gateway product, right? When people ask us what BharatPe does and are we a payments company, I'm fundamentally very clear. No, we're not a payments company. We're actually we're in the business of helping other businesses grow, and by virtue of that, we are actually a lending company. We're where the money is, which is actually helping disperse credit in a more democratic, transparent, easy manner. So then they say, but you do payments, you do UPI, you do POS, you do card acceptance. And I say, that's because all of you are looking at the revenue part. And I think Adam said it really well when he said the take rates are going down. And I think that is the trend in the long term, that take rates are going to, near to zero. So we don't look at ourselves like a payment company. We actually look at ourselves like a data science company. So all that payment data for us is actually signals which help us understand or actually create proxies of what a merchant is, what their business is. And you know, when we start doing that, we actually start seeing that the word MSME is actually it's forcing people into a box of, you know, business owners and providers. You know, you need to actually break it down into something which I call small shop owners, shopkeepers, and, you know, single proprietor service providers, the guy who fixes the puncture in your car, to someone who comes in and does your electricals or your bathroom fittings, or a guy who basically every day picks up 40 packets and does you know, cash on delivery for D2C brands and courier companies. So the spread is huge. I mean, today when we look at it within BharatPe, we have maybe 300 unique type of businesses where we are underwriting or creating underwriting. And you know, that again, 300 is condensed from a larger set, but nearly 300 different archetypes that we have to like create underwriting models for. What I think, at least in India, COVID has done is like all vaccines need a booster to be effective. Our demonetization was not as effective as COVID has been. What COVID has done is like just been the booster shot to digitization, and we've seen tremendous growth. So last month, UPI by itself processed a little under $800 billion in payments. And UPI is free, mind you, right? These are about 3.5–4 billion transactions that went through, an average size of $200, dollars. That means the remittance is there, but this value has been coming down over a period of time. That means people are beginning to use UPI for very small things like, you know, getting a juice at a juice stall, getting, you know, their shoe repaired at the cobbler, or even just running to the store and picking up a packet of milk on their way home from office, right? So the ubiquitous nature of payments is now such that if there is a phone, if there is a smartphone, people are aware about digital payments and will accept it. I think, you know, a couple of points that were touched on prior to this was around data connectivity. In India, it's very interesting because we are the largest, we are the world's cheapest provider of data and the highest users of data. So connectivity is something that actually telcos are solving for, the government is solving for. But that said, you know, there are enough companies, you know, like Paytm, PhonePe, Google Pay, WhatsApp Pay, they're all figuring out how to figure out, you know, 2G level of you know, data acceptance and data transfers and payment confirmations, right? So I think the progression of technology is definitely there. You know, summarizing more for us, when you look at BharatPe as a company, what do? We use payment as a layer to build a I hate the word neobank, and I'm sorry I might use it, but I hate the word neobank. I think it broadly brushes everyone's efforts into deconstructing a traditional banking system into a tech-first system and calls it a neobank. But when you look at the payment layer, what it does is it allows you to have signals that lets you underwrite. People with excess cash keep money with you. That's the liability side of the business. People with who are cash strapped borrow that money. And then there is a spread in the middle of it. And that spread is fundamentally what banks earn. If you look at any bank's financial statement, 80–90% of that money is coming from lending, right? And if you can deconstruct that, and as we have done onto a platform, that's really the digital journey that we are building. What we are looking to get further to is actually deepen that lending journey into more of an enabling journey. Where I see some of the challenges, and I'd love for this panel to touch on them, is I don't see very many models beyond payments, people who are in the money flow, having loyalty or traction or ability to retain customers. So whether you're talking about bookkeeping or value-added services or inventory management tools, I don't see any of those having a sustainable CACs or servicing unit economics to be able to keep their customers or their merchants on. So I think it's the payment companies and people who use payment as a hook who are going to become sort of the master platforms on which all value-added services get built in the future. Whether people will pay for those value-added services, I'm not sure. What people will pay for is access to credit, at least in the short to mid-term. I think it's in the long-term, markets like India, Southeast Asia, Africa. I think these are freemium markets. Payments is the hook. Value-added services are the sweeteners, but the real honey and the real money in the bank is lying in lending and deposits, and that's really where the business will be. So I think, what I don't see these sort of platform plays really playing out a lot. I think another point, interestingly, that was being made in this conversation was around card and card payments and card acceptances. I think with take rates going down and the infrastructure required to maintain card and card networks, what you're effectively seeing is newer technologies like UPI, soft POS, virtual cards come into play, where you're basically taking the entire fixed cost that sort of front-ended completely out of the game. In the short to midterm, cards are definitely going to be there because those signals, that data is valuable, both from a consumer and a merchant mindset, to actually improve, reduce the noise in the system. But in the long term, and we have a POS business, so I'm basically shooting myself in the foot when I say this, but I think in the long term, the form factor is going to go away. I think your form factor is your mobile, and it's going to stay as that, both on the merchant side and the consumer side.
Yeah, Dolapo, do you want to talk about how you guys are solving this problem in Nigeria? What's Traction up to, and how you guys are helping merchants with their businesses accept payments and manage their business?
Yeah, I like that when I keep on reminding, I'm thanking my business partner for deciding to use the word Traction as our business name, because everyone on this webinar is going to say Traction. I'm going to be like, ding, ding, ding. But anyway, no, but thank you so much. And also Drew for also setting the context, right? We reached out to Drew about a couple of months ago, knowing the similar business model and aspiration. And, we've gone on a number of calls deep down, and Drew has been providing guidance. So really thank you for that. On Traction, right? Mayowa Ali, my business partner, and I worked at McKinsey. And we were always looking at this, we worked for lots of clients, both the financial services and non-financial services, who saw, businesses or SMEs as either customers or vendors. But the big problem was always no one could optimally serve them. I can't count how many Salesforce effectiveness projects I've done prior to this, just to really understand how best to serve SMEs. But and it's quite straightforward what the big problems are. SMEs are multi-banked, SMEs are multi-platformed in processing transactions, and also in just recording their business activities. And so from the very onset, it was very, very clear that what was needed here wasn't anything fancy in terms of new payment technology. Everything was here, but it was more around how do you have this in a one-stop platform? And so today we lead with payments, offline payments, but specifically, the card payments and the bank transfers, because we started in Nigeria. But and on top of that, rolling out USSD and QR code. But the idea for us is like, and if when we expand to another country, say Ghana, we would have to contextualize the solution to other payment methods, right? But for us, it wasn't to say we were going to innovate and have it new, but it was like, what are people using? How do we ease, that operations from an SME point of view and aggregate all of that? To what, we've heard, a lot of services to merchants are commoditized. So bookkeeping is growing on the continent, but if you go on Google Play Store and click on bookkeeping, you see hundreds of that. Even down to payments, we see that take-up rate, as Adam said, will happen. But what we are seeing, especially from an SME, MSME point of view, is that SMEs are yearning for car terminals, affordable car terminals. But in Nigeria, for example, there's a pent-up demand. In Nigeria, we have about 400,000 or so active car terminals. And when you look at the market of formal or semi-formal SMEs, not agency banking, SMEs, that's about 5-6 million. And so it's just even first of all for us to address all of that, but also to make sure that we're aggregating across. Being with the ecosystemic vision, right? What we are actually noticing is, first of all, we are partnering with other folks. So it's not just direct to the MSMEs. We are partnering with logistics who are doing payment to delivery. We are partnering even with inventory replenishment managers, platforms rather, who are doing that. And because what we believe is that, the very first step of the journey to say owning the customer essentially starts with what the biggest need is, which is just how do I efficiently and securely collect and manage my payments. And one of the things that's been super insightful for us is your average merchant, let's call her Iya Basira, that sells groceries. She's possibly on Facebook and on WhatsApp, right? And yes, she might have a bank account, but she possibly doesn't have the mobile banking app, or has possibly powers through USSD. And we've seen this in several situations where Traction is our first business app. And when we can get her comfortable with tracking a payment on the Traction app, there's that stickerization, so to speak, right? There's that trust that makes it also so hard that for other platforms to create. Basira is not going to have 10 business apps doing 10 different things. And so, the way we rationalize and what we believe fundamentally is that once we can get Basira on payments, it's very, very clear that, for other services Basira needs, including loans, which is what we also do. We do payments, offline payment, loans, and business tools. Once we start with that payment journey, then it's then very easy to add other things for us. So I think, yes, payments will be commoditized, not yet so, and not yet, significantly penetrated in this part of the world. But once you start from that journey, it is the beginning of building essentially that ecosystem. I'll pause. Yeah.
Fantastic. So talk to us now. Who are some of the fantastic customers that you guys have, Dolapo, that you guys have and that you guys are serving now? Have to give us something.
So, what is interesting is our call for a reason for being, as Traction is I would say, the folks that potentially transact about 1 million naira, about I would say about 500 to 1,800,000 naira per month, right? And that's about 1,000 to about $1,000 to $1,500 a month. One of our first, customers and one of the highest, aggregation of customers are actually street food sellers. And, the guys who are doing shawarma, on the side of the road. And, this guy, we have one customer called King Lab. He had been telling his bank that I had waited for 6 months for a terminal, but they'll be like, I'm coming to see you. And when they see him on the side of the road, he's not doing, they don't have confidence. And that is essentially a reason for being. But what is also interesting is, right now we are in about 16 states, powering those type of sellers. We also have, some premium merchants who basically, from a customer service point of view, have not been impressed with how, their banks have provided that. And so just purely on customer service, they essentially move to us. And I think what you are going to see is the incentive for a lot of these current players, be it banks, has been they want deposits. And so when it comes to the specialization in terms of payments, that and same thing for the online payment guys, is like there is someone specializing and leading with this. and they know their stuff. And I think that's just how you want to position, people like us are positioning it as well. And so we have a varied, down to some key accounts, but like our reason for being on the bulk of our merchant base is the King Labs, what we call the classic customers. Yeah.
Awesome. Thanks very much for that. So Marcelo, thanks so much. We haven't for being with us. Yoko, you guys are giants across Africa, and we've left you to the last. So please talk to us about the journey at Yoko, and talk to us about some of the successful business models that you guys have deployed to scale across the continent.
Cool. Thanks, Lamide, and thanks for inviting me. I'm super excited to be part of this panel. Yeah, to just give you a bit of context, so Yoko has been around for about 7 years now. Started in 2013, 2014, with the insight that South Africa had a very interesting payment situation, right? So compared to many other African countries, South Africa has a very high penetration of cards. Like it was mentioned earlier, the average South African has about 2 cards. You see a good like 70–80% penetration of cards among consumers. Many of them also credit cards, which is a big differentiation. And so people use their cards on one side, but small businesses really struggle to accept cards on the other side, because the banking space in South Africa is very concentrated to basically 4 or 5 acquiring banks. And so we kind of started with this situation where 70–80% of consumers had cards, but less than 10% of merchants were able to accept them. And the reason for that was that the banks were essentially running a very cost prohibitive acquiring business. So, to be a merchant, you needed to reach certain thresholds in terms of revenue. A bank would charge you on average between $20 to $30 a month just to rent a terminal. And then on top of that, you would pay, somewhere between 2 and 4% transaction fee on payments. So if you're a big business, you probably don't care that much, or you can negotiate those fees down. But if you're the kind of businesses that Dolapo mentioned, if you're on the side of the street, or if you're a small shop that's just starting out, even $30 a month is a pretty cost prohibitive expense to put into your business. And so we then kind of we used a little bit of like the telco mentality to flip the business on its head, and said, okay, rather than renting the terminal, you can just buy it. And so we're now offering terminals that are as cheap as like $20 once off for merchants to buy, and therefore kind of reduce the monthly fee, and then also make the transaction fees really competitive. And then the thing we really did was then turn distribution on its head and say, rather than making the process of getting a terminal really painful and intense, we make it really easy. So today you can see a Yoko ad on Instagram, click on it, and within 5 minutes you're signed up and we ship your card reader. You can now also walk into retail shops, pick up a Yoko from a shelf, sign up at home, and get going on transacting. So really almost like consumerized merchant payments in a sense. And a big part of that was also not just focusing on the traditional definition of a small business, but also allowing individuals and sole proprietors to get access to card machines. And so the combination of that has now allowed us to grow to about 160,000 customers in South Africa, and kind of growing quite aggressively from there. We've been very lucky in a sense, because the South African market today is still very different to the markets that Drew or Dolapo mentioned, where there might be a trend towards kind of cheaper payments at some point, but we're not there yet, right? There's no South African UPI yet, or there's no central bank regulation on transaction fees, and so kind of in that context, we've been able to run a business that kind of monetizes on the payment side. But I also fully agree with everyone that the future is on what can you do on top of it. And so we started offering, about 3 years ago, we started a capital business where we give merchants working capital, which has been very successful. We offered a point of sale software. We offer a point of sale software that kind of gives you stuff like stock tracking and all of these things, which has been super helpful. And funny enough, to Drew's point, we actually experimented with what happens if you take payments away and you said, let's lead with a point of sale software, or let's lead with capital as a product. And we realized that the stickiness of the product just gets completely out of the window. Because if you put yourself in the shoes of a merchant, if a customer is there with a card or whatever digital payment method, you have to use that to accept. If a merchant just buys something from you and you have to remember, oh, I need to put it into my app, or I need to whatever, like use this thing to do my bookkeeping, it requires a lot of mental work, which then often leads to people just not doing it. So yeah, so that's kind of a little bit the Yoko story and what we've done so far. And also, I guess to Dolapo's point earlier, maybe a last part, just when you look at other markets, you see that you have to adjust to those markets, right? So the model that worked in South Africa wouldn't work in Nigeria. It most certainly wouldn't work in India. And so, as we start looking at how is Yoko going to look in markets outside of South Africa, we're very cognizant of the fact that we need to adapt to the local payment system from a consumer side, most importantly, right? Like, what do people use? We cannot just insist on cards, but also from an economic and from a product perspective, adapt to what do merchants need and what essentially would allow us to build a business, which is very exciting. And there's a lot of work we're doing on that as we speak, which is really cool.
Fascinating. That's a fascinating test and experiment that you ran, and the stickiness of the product really proved itself. So that's awesome. Drew, for BroadPay, like what did it take for you guys to scale really across India? And what are some of the building blocks that you guys have used to service your customer from the payment side, and then also from obviously the lending you've talked a lot about as well, right? So you're on mute.
Let me take the second part of the question first, which is what are the building blocks? And then I'll just talk about how that worked for us. I'll sort of weave a little bit of the story into that, right? I think there are three things that really worked for us, right? We were cognizant from the start. If you look at payments, it's a margin of margins business, right? You're making margin on someone else's margin, and that margin is very slim by itself. And if you do platform plays, Marcello will tell you, you're doing it not just in payments, but you're doing it everywhere else, right? And the whole volume versus price game starts. So payments is very high, margin very low. You go down to depositing or saving products, then lending, then insurance. Insurance volumes are very low, but margin is very high. So somewhere the absolute numbers all marry together if you're creating a sort of a one-stop shop. We knew that if we wanted to succeed, we needed to use technology, and we need to be technology first. It's very easy for well-funded startups to throw warm bodies at a problem and hope that the tech will catch up. We actually had to discipline ourselves to use technology in a scalable and sustainable manner from day zero. So use the India stack of Aadhaar, mobile numbers, use OCR for KYC, use whether it is consent for SMS data or it is location data, to try and do better underwriting and build better heuristics around how good a merchant is, how healthy a merchant is. So I think all of that tech and building it up front and saying we will build a tech first product and we'll wait for the tech to reach a level that we can launch, and making sure it didn't take too long, that you just didn't miss product market fit or product timing, right? So that was the first part. I think the second part was, which I don't think enough people do, is brand building, right? We did it to merchants, and in the early days we were called B2B because unlike Paytm and PhonePe, we weren't doing the merchant side and the consumer side. We were only doing upstream payments, right? Merchant and to bank. So we were called B2B. We were maybe the first B2B company that put a Bollywood star as its brand ambassador, shot an ad and put it in primetime TV. Like, there weren't startups doing primetime TV ads, and we were doing like B2B startups doing prime time. So we were the first guys who did that. We're the first guys who did, ATL, BTL, everything. Every city you went on, you got out of the airport, there was a big board that said Bharat Pay. You went to any of the local shops, that was Bharat Pay. So I think the fact that you're visible, you're relatable, you say you're merchant focused, you're merchant friendly, is something that people recognize. To just give you a small data point, we recently concluded our NPS and we thought, oh my God, we're a startup, we're 3-year-old, okay, the valuation has gotten ahead of us, but we don't care about valuations too much in our company. We're not going to have a great NPS. And I was like, basically scared for my life, saying, I'm the owner of merchant experience in our company, and I'm going to lose my job. And we ended up getting an NPS of 50. And the two things that people recognized was seamless technology and the fact that they knew exactly what the brand stood for. I think the third thing is offering. The fact that you build a one-stop shop, but you figure out what is leading versus lagging. So payments is leading, everything else lags that, right? You try and enter lending, but then you have to collect from merchants at the end of every month. And because you have to go 5 times to the shop, your collection guy speaks rudely, and that impacts your brand. And so there are a lot of things that end up affecting your brand based on how you chose your offering and when because we're in the money flow, because we collect on payments on a daily basis, because we collect loans back on a daily basis, because we allow them to deposit the money and earn interest on a daily basis. We picked up what is leading and then built it down, and everything that came downstream from that actually helped us. All these 3 things: scalable tech, a relatable brand, and a one-stop shop where everything was sequentially thought of what logically would be the next step. What's next, actually built trust for us. So what we ended up doing is, now with over 10 million merchants on our network, within a 3-year span, with as high as 33.5 million of them using any of our products every month. What we've effectively done is we've built a very high traction, high loyalty system on our platform, right? We've launched a merchant loyalty club. We've got insurance on our platform. We've got, we've got bill payments. We've got send money. There isn't anything that they can do with their bank that they don't do with us. And so the whole idea of taking money back to the bank also is now alien to some of our merchants. They say, we leave it on you and we just do everything from your side. So I think the story has to be something that's built, at least in financial services, has to be built on trust, has to be built on reliability, and has to be built on economy and efficiency. Because if you're not efficient, there is no way you're going to be able to recover that in the future. And you don't have a path to profitability. So I think for me, that is there. A lot of people come back and say, hey, why didn't you talk about capital? And you're like these guys who've raised like $610 million to date today, and you're worth 2.85 billion. And I make 2 points to that. One, we've raised Series E capital recently. We haven't even touched our Series C, Series D, or Series E capital. We still have about $500+ million lying in the bank. We've been operating for 3 years. So when people say, what's that? And I'm like, that's a really big sign that says, hey, you want to walk down my street? You should just know who I am, right? I think the other part to it is, I think any business, especially startups in today's day and age, when there's a feeding frenzy, when I say feeding, doesn't mean people eating, but people forcing capital onto you. You need to remember that, a business model is not predicated on capital. Capital is predicated on the business model. So what business you build decides what capital you need. We recently won a bid to become an SFB, a small finance bank license. We are maybe the youngest company ever to receive that license from our regulator. So it shows you what a progressive regulator we have. But with that, what it also does is it sort of, to some degree, is we're raising capital because we need that to build the bank of the future. Right? It's not to, just go out and increase our burn rate. So we are still bootstrapping as a 3-year-old company. We still behave like a unicorn rather than a unicorn, if that's the right word to use. And I think some of those mindsets also, so I think the attitude, the mindset, the vision clarity is also what's worked for us, knowing what we want to do, and more importantly, knowing what we don't want to do.
Awesome. The terrible investor in me, when you were talking and describing your story, the terrible investor in me said, you were talking about the branding and, you had ads every time. I was like, I was wondering how that's impacting the CAC. And then you said you hadn't touched your Series C. So then I said, let me not ask any questions. Let me not ask any, that's it. That's quite it.
Let me give you an example. So the Cricket World Cup starts next month. We're a sponsor of the ICC. I think ICC publishes how much they make from any sponsor. I just welcome everyone to go and figure out what we are paying and what every other competitor of ours is paying. I think their marketing teams need a review by their CEOs and their board at some point in time.
Fantastic. And then quick one, the license that you just got, what does that license allow you to do?
So the license allows us to own and operate a small finance bank. So our partners are a company called Centrum Wealth. They're one of India's most respected wealth management companies, financial services organizations. So India has multiple licenses. One is a full retail like ICICI, HDFC in the private space. Small finance banks are sort of focused on, they have some regulatory constraint on focusing on merchants and businesses and MSMEs and opening up capital access as well as banking services to them. And that's the license that we have received. And so we're going to, we're in the process of setting that up as well. Yeah.
Awesome. Thank you very much. Dolapo, maybe you can talk about Nigeria. What's the stack look like? What do you see it for Africa?
Dolapo traction.
Yes,
I think it's
okay. Okay, so I think just to piggyback on what Dhruv said, right? And I think for us, when we think about the building blocks, it's obviously the product, it's distribution, and I'll go into each of them one by one. Product, distribution, and I think it's more about just the customer success as well. So on product, I think it's especially for the types of customers that we are targeting, the UX just needs to be simple. Even down to how folks sign in, it's not going to be emails. Sometimes it's also going to be phone numbers. And so the UX needs to be simple. No one, yes, it's money, but they need to just feel comfortable and not feel ruffled by all this data, etc. And even, you want them to track. And how do you think about, they can track their monies and look at it from a historical point of view and also a day-to-day point of view. But I also think, on top of that is also the storytelling, right? Especially for us. And, I think it's super important to basically say, we are your financial services merchant solutions partner. And, that is what, everywhere we discuss traction, it's about, we are your partners. And one of the things that I am big on is how can I get, whoever engages merchants, that like a merchant can come to me to be like, I'm thinking about opening a business, but like I need some help in thinking about that. And that is something that, traction will be like, yes, we don't offer this, but like we can connect you, and that piggybacks to even the customer success. It's, we're quite intimate in terms of we have customer groups. Right now, I have over 200 of them. And so it's like, I see all this messages, right? And customers waking up in the middle of the night and just asking about different questions. And I think, and it's all exciting and interesting questions, right? On distribution, what has been super important as also, especially in Nigeria, where the market is concentrated in Lagos, is like, how do you think about other states, right? One of the things that we are doing is, having what we call independent sales agents. And they essentially branded as SME consultants. And these are the guys who potentially, they are not employees of Traction, full-time employees, but like essentially independent agents. And you give them tasks either to verify, actually sell, or cross-sell, or help a customer with an issue. But especially the need to, one of the things that made us do that is just contextualize them, and not a a startup that a San Francisco investor sees and imagines that that's what the world should look at, how payments work in the US. But a lot of our customers are using payments for the first digital payments for the first time, and so that trust essentially, and which links to what Drew said about branding. It's a trust. Who are you people? If I have a problem, who can I call? And so our SME guys, which we train on an ongoing basis, basically are the consultants that help and engage with this merchant on an ongoing basis. And right now, we're growing that over the next year to over 10,000 across the country, which will help with the acquisition as well. A lot of our guys, like Yoko uses a lot of digital marketing. That works to some extent here, but like most of our merchants are offline. So how are you using, the SME, our independent SME consultants to also drive that? Yeah.
Awesome. Thank you for that. Osama, maybe if you can opine on some of these comments about, what's, the future delivery method is being the mobile, you're interesting to hear your opinion, and then also, hear about how you think about partnerships for your customers.
Okay. So I didn't have a very good connection, but it sounded as if you asked me to talk about what I felt about the mobile being a delivery method for payments.
Correct.
All right. So, as you all know, I work at EcoBank. EcoBank is a Pan-African bank. It was founded as a Pan-African bank with, actually 69 investors from 10 different countries. We have a Pan-African switch, a technology backbone which links all our different countries of operations. So we enable partners to expand across Africa with a single point integration. Now, I will talk a little bit about partnerships in a second, but just to give you a sense, we're very technologically inclined, because of what we were trying to do from the beginning, which is remove the friction of trading between countries. So a few years ago, we launched, we started a strategy called a Roadmap to Leadership, which was really about leveraging digital solutions and agency banking to reach about 100 million customers, serve them with world-class financial services. And what we found was that by having a unified mobile banking app, just one app that is available across our 33 markets, we've been able to serve a lot of people's financial services needs. Not only our incumbent customers or the regular current and savings account holders, but also we expanded financial inclusion by including a way for a light KYC bank account to be opened by people who downloaded that mobile application. And also we made the same thing available on our USSD channel. And so we do think that mobile is the way of the future because mobile is ubiquitous. And so to distribute financial services in this vast terrain in which we are in a cost-effective manner, you definitely need to look at mobile. And then also we added on agency banking, which is enabled by mobile devices as well. Now, in terms of the second aspect of your question, which is about partnerships, we welcome partnerships at EcoBank with fintechs, with telcos, with big tech and others. As a matter of fact, every year we hold the EcoBank FinTech Challenge and we receive hundreds of entries from all around the world, mostly fintech startups who are interested in participating, and because the top contenders will win prizes, but more importantly, they get the opportunity to be EcoBank FinTech Fellows, which means that they can scale up their solutions across our 33-country network in Africa. And submissions for this year's EcoBank FinTech Challenge are actually still open. They close on the Monday next week, I think the 20th of September. So if anybody out there is watching and is interested, they should really look at that. just go to the website, ecobankfintechchallenge.com, and apply. Our approach to partnerships is threefold. This is going to reveal my ex-McKinsey side. I'm going to talk about 3 Ps, platform, purpose, and principles. First, platform. We see ourselves as a platform that partners can plug into. EcoBank has a developer sandbox, where our partners can actually safely test our APIs in that safe environment. And like I mentioned, with one single integration, they can connect into our technology backbone, eProcess International, and we can enable services for them in up to 33 African countries, subject to local regulation. The second P, purpose. We look to see what we can do with the partner to create additional value for everyone. The purpose of the partnerships and alliances come in different forms. We enter into distribution partnerships, innovation partnerships, co-marketing, and many more forms of partnership. And this is similar to what happened in the pharmaceutical industry and also big tech. They've had to figure a way to do some of these types of partnerships to be able to do well. So in our case, we also look at that. And then the third P is principles. We look to combine the best of our capabilities with those partners, following some key principles. First, the superior value proposition at a lower cost than if provided by just one party. The second one is find scale partners who seek Pan-African coverage. And then the third is, it needs to be financially beneficial, right? The alliance needs to be financially beneficial for everyone who's involved. And so those are the principles, and that's really how we go about partnerships at EcoBank. Thank you.
I love you said 3 Ps. We follow 3 Ps as well, but that's product, people, and path to profitability. You fix those 3, you have a business on your hands. You don't have those 3, then you need to have a chat with your investors.
Fantastic. I think that leads to where exactly we want to land. It's like, who will be best suited to win in this space? What are the key traits, or what are the key things that you'll be measuring? Dolapo, maybe from Apis, we can take it from you. When you're looking at companies and your portfolio, talk to us about what do you think about being best suited to win?
Look, I think that's a who's best suited to win. I think that's a tough question. You as an investor should know that. But look, I think we have touched on quite a few of them over the course of this panel, right? I think the market context is super important, right? So what's happening in India is its own specific market, has its own specific infrastructure. Building around that is important versus being in a place like Nigeria or being in a place like South Africa. So the market context is super important. And I think when we're thinking about retail payments, it's really delivering sort of a value-based solution for the SME customer, and really looking at them from a holistic perspective, right? I think there are a lot of businesses that have done very well just by being in the slipstream of cash to digital, right? And as we've discussed today, that kind of rope is running out, such that when we look at this space now, it's really thinking beyond the basic payments, and thinking more about what's the ecosystem you're building for the SME, whether that's in the offline space or the online space, or even the omni-channel solutions provider. So businesses effectively that are obsessed with what the solution that they're providing to their customer. And I think Drew mentioned earlier on that, payments are the obvious hook. I think there are now, if you look at some of the other solutions being provided to SMEs, whether it's accounting software, whether it's inventory replenishment, I think there's a lot of capital chasing those, a lot of capital and a lot of smart people thinking through those particular solutions, such that over a period of time, one has to be looking over their shoulder around those solutions being top of mind for merchants, and those providers building a suite that allows them to make the kind of unit economics work. So where they may not work on the face of it or initially, I think over a period of time, a combination of solutions could deliver, path to profitability for some of the providers in that space. So those are just a few of the things that one is thinking through as we watch the space evolve.
Dhruv, I think you can go.
No, I can't disagree with anything that Dolapo said. I think he's put it beautifully. I think I'll layer a little on top of that, right? I think you need to also be very, very self-aware. Right? I mean, it sounds a little globe and apple pie and motherhood statement, but you need to be very self-aware of what is it that you want to do as a business, right? So to Dolapo's point, absolutely, there are other hooks beyond payments, but then you get those guys who, to Marcello's point, will sit down and apply their brain, or have employees or be a larger size who can operate those softwares and use them, right? Now, these are also guys who are going to, by virtue of that, be smart enough to shop around banks and financial services institutions and get great rates on loans. We as an organization realize that we're okay chasing higher delinquency if we get a higher profitability. So when we do lending, we chase a higher NIM, but our mandate is clear, right? It's okay, you can build a riskier book, but it should be a more profitable book, both in absolute terms and percentages. And that's the niche we've chosen to play in. Now, whenever we've started doing things like secured lending, gold loans, asset-backed lending, we've stepped down and gotten into competitive or slightly, the mezzanine of between competitive and where we are, somewhere in the middle, made some compromises and tried to experiment with various things like trade finance and invoice portals and uploading invoices and stuff. But I think the lesson that we've learned is, and I'll summarize it in one line, is you need to know what you're going after, and I need to be crystal clear about that vision. So for us, the vision of what we want to build and where we want to go has been very clear. Everything else is just going towards that point of arrival. So we know where we are, we know where we want to be. There's a bunch of tangents we can take, but we choose not to take them. And very interestingly, our co-founder and MD Ashnir, I think he's the guy whose job at the end of the day is just to tell us, no, stay on track, because everyone wants to experiment everything, right? The whole idea of working in a startup is you get to experiment, you get to do new things, and you get to burn a little bit of money. We're told to stay on track. Now, so that we are not compliant on track often enough, there's a beautiful saying that, goes around in an organization. If you haven't put $1 million at risk, don't come back and have a conversation with us. Like when it goes to 1.1 million, come back and say, hey guys, we need to do something about this business model. Something's not working out. So I think the second thing is being able to take risks, right? Being able to take measured risks and having that appetite is extremely important, because these are uncharted spaces. There is no precedent for any of this business that we're doing. You're scripting a new high every month. You're creating new business models every month. So to say, because this happened in the past, it should happen in the future, isn't ever going to be true. So I think those two things, staying true to your vision, knowing exactly what space you want to operate in, and having a little bit of an appetite to take risks, measured risks, is really what helps you succeed in this space, in my opinion.
Fantastic. Marcello, maybe you can talk from a Yoko standpoint.
Yeah, I'm more than happy to. I mean, a lot of really smart things have already been said that I can definitely second. What I would probably just add from our perspective, which has been really, really important, is just kind of focusing on the vision. And I think that also speaks to Dhruv's point, right? It's just about like making sure you always keep in mind who you're trying to serve and what you're trying to solve, and really making sure that you don't go off that track, right? To give you an example, like we've been it's been very like our focus has been very much on small businesses. But once you go to small businesses and once you measure your kind of transaction volume, it becomes very tempting to kind of shortcut that metric by just signing up bigger businesses. And so there's always like a bit of a almost like a gravitational pull to be like, oh, but like, what if we did a partnership with this grocery store chain and our terminals would be in every supermarket in the country? What if we could sign up an airline? Like, what would this do to our TPV? Amazing stuff, right? But I think the important thing is really just been kind of like keeping the eye on the prize and focusing on who you're really trying to serve, which in our case is the underserved small business population, and really making sure we do stuff that helps us serve them. And we try and answer the hard question around how do we serve more of them faster and better, and not try and kind of shortcut our way to the metrics and in an unhealthy way. That's probably the only thing I would just kind of add or echo from our side.
Yeah, thanks. And then Ozhan, thanks everyone. I know we're running late. So we're gonna get through Ozhan and then Dolapo, then we'll take maybe 2 or 3 questions and then we'll wrap. Thanks everyone so much.
Okay, so I think sustainable success in payments requires an entity to achieve scale and build trust among the key stakeholders. Let me start off with that thing about achieving scale. Distribution is really king here. You need to have a broad network of acceptance points, and so that there are different places where people can receive payments from stores of values into your different acceptance points. Establishing that merchant payment network may come in the form of hardware units like POS terminals, or maybe software like a QR code, along with some kind of merchant portal to monitor those transactions. Achieving that payment networks scaling the payment network requires a certain amount of capital investment in structure, and I suppose that's why some of these companies, like Dhruv was mentioning, have raised significant money, because you need to invest in infrastructure, training, and awareness. And I believe that with this scale, the unit economics of serving the merchants can come down, and then allow you to serve even smaller merchants quite profitably. Banks are actually well positioned to achieve this scale, as they already have relationships with merchants or businesses, and also with consumers. Along with that, access to be able to transfer funds between these parties' accounts. However, as technology enables payment integrations via APIs and quick scaling across large segments of the population, other payment providers are also doing quite well in the space. The second one, building trust. You need to have the confidence of merchants, consumers, regulators, and other key stakeholders for you to be successful. Business owners need to be educated about the solution that you have. So that's the product literacy. They have to believe in the value proposition that you bring to them and the sense it makes for them in their businesses. They must see the service provider who will handle the transfer of value from their customers to them without much of a headache. When consumers need, the consumers need to understand the offering as well. So you have to have both sides of the coin, the merchant side and the consumer side. And they need to trust and use it. They need to know that, for example, if they make a payment, it goes through, there's no situation where they have to start dealing with multiple levels of problem solving to be able to get their money to the merchant or back if something went wrong in the process. So that kind of trust, I think one of the large payment provider in Kenya has about 90% of all mobile money transactions. So obviously they've built that trust. So that's what's required, I think, to have a successful business in payments. Thank you.
So if I was to wrap up, right, from my end, I think what is our view of the world, what we think is super important. I think the tech and product, and the tech and product. But I think that the other big thing for us is the distribution, as I previously mentioned, the storytelling, but also lastly, it's the interoperability, right? If I was on the tech and products, one of the things that's been super important, especially as we look at a view of the world, is very ecosystemic. It's just ensuring that we have the technology stack to basically support our merchants across the journey. And I think even on top of that is what we are solving is even the simplicity and how you start with, right? And what you start with. And for us, that is offline payments. On the back of that is also even linked to the tech and infrastructure and the product, is that we don't have to do everything ourselves. For us, there are three technology foundational stacks, and that's the offline payment, that is the loans and the business tools. But for us to build that ecosystemic, we don't need and we don't aspire to do every single thing ourselves. And so even how do you basically build in a way that you are making way for partnerships and a plug and play situation, that is something that is super important. I think, I had previously in answering the previous question, I talked about distribution. I think the last thing is just interoperability, right? Also with the ecosystemic view. And when you look at offline payments, we need to always bear in mind that there, from a consumer payments point of view, people are leveraging different platforms and different types of payments. And so, with ensuring you're the one-stop platform, it's first of all, we are accepting cards and bank transfer and USSD and QR code, but also, a lot of merchants are using mobile money and also using, wallets. So how are you building that, infrastructure that allows for that interoperability? One of the things that we do as well, linked to interoperability, is the fact that we are agnostic. So people on our platform choose the banks that they want to get settled in, and so it's we trust what we do, and so it's like, hey, you keep coming, but you choose the banks that you want to settle in, and so that informs even the types of partnerships that we have to ensure that the merchants have the freedom to choose. So those two things that are the biggest for us, in terms of succeeding, essentially. Yeah.
Awesome, thank you very much. So that basically wraps it up. We'll jump into Q&A from here. So we have a question, that talks about kind of, the environment and landscape in Nigeria, with governments. We also have, obviously SMEs are severely affected by currency and, the devaluations, and, so I was wondering, maybe Osohan, maybe you can talk about, or anyone, can talk about how startups, how your companies are thinking about navigating regulation, and navigating regulation challenges. Thank you.
Okay. So regulatory compliance is very important when you're handling people's money. And so there are some suggestions that I have in this regard. The first one, I would say ABC. Always be compliant. I know this might be cheesy, but it might not be the first thing on your mind when you're focused on innovation, right? To think about regulation. However, as many payment providers have discovered, it can be the difference between having a business that's running and one that is suspended. So investing in compliance and control functions are key. Regulators are looking out for the safety and security of their citizens' finances. So take the time to get to know what their concerns are and understand what their key agenda is. The second thing I would say is don't over-index on regulation, because while it's important to play within regulatory guidelines, it's also critical to innovate to meet customers' needs. Some people feel that regulation and innovation are opposing forces. However, let's remember how many innovations have come up as a result of guidelines from the government. So a company that wins in the payment space is one that finds a way to meet customer needs within regulatory boundaries. Then you can have a sustainable business. Any success outside that, would eventually be corrected by the authorities. And then the final thing I would say is try to embrace the regulations and leverage them to your benefit. It's pointless to try to fight regulation. It's like trying to box with God. I mean, you're just not going to be very successful. So what makes sense is to quickly come to terms with the rules and learn how to leverage them to your company's advantage. For example, when fees were slashed in the banking space, some banks adjusted their model so that they could scale up for volumes and find a way to offer value-added services which might have a higher margin. So, I know that in October, the e-Naira will be operational in Nigeria, and payment providers who've learned about this position themselves to benefit from it will win big in this market. So that's what I would say. Thank you.
Lamide, if I was just to add, right, to that, especially looking at the Nigerian context, I think it's, and I get this question a lot, and that's why I want to answer. I think it's super important, first of all, be compliant, right? But it's super important that everyone, I'm a little bit, I won't say anxious, because I think it's, the CBN, they have an agenda. There is a focus. Right now, the focus is defending the Naira. So even as a startup, you do not want to build a business that does not defend the Naira. And so it's just always that there needs to be that feedback loop. And, I think what we are doing as startups is, a lot of, I, for example, manage government relations. And so, you have built that relationship with the CBN. But I think that, where we need to get to is like, how are we coming all together? And I think, even Consonance and a lot of VCs can actually help provide that representation. Like how are we provide, I won't call it lobbying, but like providing representation to the CBN and just, ensuring that that feedback loop is super clear. One of the things I also believe is like when that super loop is super clear, and some people are doing is you kind of know what's coming. So no one comes, yes, you hear in the press that some, an announcement of something coming, but I believe, the CBN, you would know 3 months before. And it's just ensuring that, you're in close, engagement with the regulators. And even as much as we want to disrupt, we need to know the confines in which you want to disrupt and not disrupt regulation, but, help and partner with the CBN to influence and direct regulation. Yeah.
Awesome. So this is going to be the last question. I think it's quite interesting, but it's, what does the roadmap look like for adding additional services, and, adding to that, when do you start? Like, at what point would you add additional services, and how do you think about, retaining your customer and adding on new users with adding additional, value-added services, vast services? Maybe Dolapo, you want to start on how Dolapo Epis, on how you advise your companies on this.
No, I think, as I mentioned in the beginning, I think the key principle that we use is you want to support as an SME focused business or as a B2B business, you want to support your customers with what's most important to them, which in a lot of cases is growth, right? So whether it's accepting payments or managing their businesses, a lot of that is routine. You almost have to do that to get a seat at the table. But where we've seen a lot of success and where we're focused at the moment is how do you support the businesses to grow? Because ultimately that's how you drive engagement and retention. So there is globally there is kind of a well-trodden kind of product stack for SME solution providers. If you look at the likes of Square, Stone, PagSeguro, etc., where they lead with payments, and then you begin to layer on services, value-added services, lending, loyalty, issuing cards. There are quite a few of these, and they can ERP systems, and they continue to grow, right? And I think what's really happening is providers are listening to their customers and innovating to support their customers.
Awesome. Marcelo, what's your perspective at Yoko when you talk about adding I think it's like the inventory management and the CRM for SMEs. How did you guys think about building out your stack?
So can you hear me? You're frozen.
We can hear you now.
Okay, cool. Sorry. Yeah. So look, it's been an interesting journey. I think with a lot of these things, it's almost like the what you're going to build is pretty straightforward. And like as Dolapo said, there's almost like a bit of a playbook in terms of kind of what you build out over time. What I've seen over time, the trickier question is like, when do you build it? And I think the kind of experience we've been through is having to balance between how much do you improve your core business versus how much do you layer on top, and how much do foundational improvements in your core business actually then help you accelerate other stuff later, right? So, for example, we've invested a lot just in the kind of transaction experience of a card payment to make sure it's more likely to get approved, it's more likely to get processed faster, and it's gotten us to a point now where like something as basic as a transaction approval speed is probably a third of what a bank terminal would be, right? Because we've invested so much in that. And as much as nobody really buys a card machine looking at the specs of how a transaction is processed, knowing that the transaction will go through, knowing that the transaction will go through quickly and the experience is good, pays off disproportionately, right? And so I think the interesting challenge that we've always had to balance is like, how much do we invest in foundational growth and core business versus other businesses? But what we've also seen is that businesses like Capital allow us to not just grow our core business because people are attracted by Capital, but also retain the core customer because Capital then makes them stay and makes them continue using Yoko. So I think it's all just about kind of how do you make sure that almost like whatever product you add is not a separate product, but is almost like an extra, almost like spinning force on that flywheel of growth you're trying to build, right? So I think as long as things are connected and as long as you're building stuff that fundamentally isn't separate but helps your core business grow as well, I think that's when you're really hitting the spot. But finding the way of doing it and finding the timing is tricky. And that's different for each company, right? It depends a little bit on like resources and team and market you're playing in.
Of course. Thank you very much. Dolapo Traction, I don't know if you want to give any last words.
No, famous last was, I feel like this has been a super insightful session, and everyone from different contexts and different regions being able to provide insights on how they see the world. I think the big things for me is just how there needs to be simplicity, and also reaffirming the need that the ecosystemic is a way to go. Essentially, the ecosystem, building an ecosystem is a way to go, and also what you lead with, which is payments, right? I think also one of the things that was super important is just to be aware, and I think emphasizes the need from a technology stack point of view that if you're going to, first of all, there's an opportunity, even leading with what Adam mentioned in the beginning, there's an opportunity, within Nigeria in all of these markets. But like, if to expand, there needs to be, that has to be something you think about, from the very onset, because you need to build that, infrastructure that can enable, say, mobile money, for example, or QR code or etc. Because different markets demand different things. So I really appreciate everyone joining. I think it's been a very useful and insightful conversation. But I'll pause. Yeah.
All right. We'll wrap it up from there. We've run over significantly, so we want to thank everyone for their time. And the Dolapos, Marcelo, and Mr. Osahan, thank you very much for your time. We greatly appreciate it. And obviously Drew, he had to drop. And then we also have, over 50 people who have stayed with us for almost, 2 hours. So we appreciate you guys that have stayed with us. Yeah, we retained about 50% retention rate. So I think that's not bad. All right.
Okay.
All right. Thanks, everyone. Cheers.
Thank you.
Yeah, we'll have a link
Thanks,
to
everyone.
Discord as well, so everyone can engage there. Yeah.
All right. Thanks.
Oh,
And have a good
Bye.
one. Bye.
Have a good day.
Bye.